Hello and welcome to Finextra TV. I'm Hannah Wallace and we're here at Money 2020 in Las Vegas. Kindly joining me now to talk a bit about regulation is Richard Teng, Financial Services Regulatory Authority at Abu Dhabi Global Market. Hello Richard, thank you very much for joining us.
Thank you for having me.
So to start off, could you tell us a bit about how innovation can be promoted while also ensuring security?
Absolutely. So we're very happy to be one of the key regulators around the world that's really fostering growth and innovation in the fintech space. If you look at it, there are a few regulators that do it very well in that space. UK FCA has always been cited as the first one to introduce a regulatory sandbox around the world. We at Abu Dhabi Global Market has the second most active regulatory sandbox around the world by today. And we are a very young jurisdiction, we are 4 years young. Singapore in the Asia Pacific region is another very good example of another key regulator around the world that has managed to balance innovation, the needs of innovation with the need of proper regulation and risk management. So I do think that we are pretty proud to be flying that flag in the Middle East and Africa region, supporting innovation and growth.
Well, that leads me on to my next question. How is the RegTech space shaping up in the Middle East and North Africa? What are we seeing?
I do think that the entire fintech, regulatory technology, supervisory technology space is shaping up very nicely. We are at Abu Dhabi Global Market, we are a financial services regulator, but we also look at how to develop the ecosystem. So if you look at what the government in Middle East has done in the last 2 years, approximately 1.7 billion has been committed for investments into fintech, into tech ecosystem, into VC funding. Out of that 1.7 billion, the Abu Dhabi government contributes approximately close to 1.4. So it shows the commitment of the Abu Dhabi government in terms of advancing the economy, diversifying the economy, and really moving the economy from one of analog to a very digital economy. And we are supporting the agenda in Abu Dhabi Global Market, not only looking at how to foster the ecosystem, making sure that the fintech, the RegTech, the supervisory technology firms have the right funding infrastructure, have the right partners in place, working alongside with them in the financial institution space with regulators such as ourselves, but making sure that in terms of rules and regulations, we are the most advanced in the Middle East regime. Looking at I mentioned we are the first to introduce a regulatory sandbox. Now it's the second most active globally. We are the first to introduce rules and regulations governing digital securities, governing crypto exchanges, and digital banks. So we have a first digital bank in Middle East, and that's Anglo-Gulf Trade Bank. Then the trade finance wholesale space, and that's exciting.
That's really interesting and very exciting as well. But what does it all mean for the consumer population and the fintechs and the relationship between the two? What are the sort of opportunities we're seeing?
There's vast opportunity. If you look at Abu Dhabi, it's a gateway to 1.6 billion people in the Africa and Middle East region. It's a dynamic region because there's going to be huge demographics growth in the course of the next 30 years. By the year 2050, that region will account for more than 50% of the world's population growth. But if you look at the current state, about close to half of the population are below 25 years old. There's a huge community of unbanked or underserved community. The payment space, the remittance space are huge. Not many people are within the banking system, but you have things like mobile that can facilitate inclusion within the financial services regime. You have fintechs that are trying to transform that service. You have a lot of remittance of workers that's situated there, but remitting money overseas. And the cost of remittance can be extremely high if you are talking about small dollar denomination. And they're transforming that space to really compress what consumer needs to pay and what consumers can access to. So that's extremely exciting for us.
And where does digital currencies fit into all of this? I'd love to hear a bit more about that.
We call them digital assets because they have not demonstrated all the characteristics needed to be a currency, a store of value, a medium of exchange, a unit of account. But we have the world's most comprehensive regime on crypto exchanges that trade all these digital assets. And the reason why we do that is when we started speaking to the institutional investors, they are of the view that there are a lot of risks that have not been mitigated or addressed, be it AML, KYC risk, or custody risk, which is important. If you have coins that continue to be lost or stolen, it doesn't instill confidence into that asset class. The technology governance risk in terms of cyber attack, investor protection risk, and of course, how the exchange operate, how does the trade match, the exchange trading against their clients. So we have formulated that, and it's only with managing all those risks that you can bring in institutional investors to make them a more meaningful participant in that space. Without them, if you have a space that's just predominantly retail or high net worth individual, you're going to see a lot of volatility in the asset class. So we are trying to bring more stakeholders in to support the growth of this particular asset class.
It's a fascinating space, and I think it's one that's going to be driving a lot of conversations at this year's event, which I'm going to let you get back to. So Richard, thank you for coming and sharing your insights. It's been a pleasure.
Thank you so much.